Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning on a Monday, and we will start with US equities, which fell from record highs on Friday as consumer sentiment softened. The S&P 500 closed down 0.3% at 6,450, while the Nasdaq 100 fell 0.5%. University of Michigan sentiment dropped. It was its first decline since April on concerns that tariffs will likely worsen inflation. Meanwhile, retail sales rose in July, and that, combined with the surge in PPI data, saw traders reduce their expectations for a rate cut somewhat in the coming month. Speaking markets, the VIX rose 1.8% and finished just above the 15 level. The dollar index fell and the US 10-year yield rose above 4.3% as it gained for the 8th session in 9. In commodities, gold was flat at $3,336 an ounce, while Brent ended below $66 a barrel as hedge funds cut their net bullish bets to a 14-week low. At home, the rupee settled 0.1% down on Thursday at 87.56. Earlier in the day, S&P Global upgraded the nation's credit rating to BBB from BBB-, but this had little impact on the currency. However, the yield on the 10-year benchmark bond fell 8 basis points to 6.4% in a much-needed relief rally for bond bulls. In other data, India's July trade deficit widened to the most since November 2024. The number expanded to $27.4 billion from $18.8 billion in the previous month due to a considerable jump in oil and gold imports. Speaking stocks, in the Nifty finished 12 points higher at 24,631, while the India VIX rose 1.8% to settle at 12.4. Mid-caps and small-caps ended lower. 6 of the NSE sectors gained, with IT and financial services gaining 0.4% each. Wipro was the best performer on the Nifty as it advanced 2.1%, while Tata Steel was the worst as it fell 3.1%. Technically speaking, Tuesday's high near 24,703 is the barrier to overcome, and should we close above this level today, the better for bulls, who will then have 24,956 within their sights. Let us also remind ourselves that so far, support in the May gap up area between 24,164 and 24,378 has held despite many breakdown attempts, and therefore it still remains a buyer's market in the medium term. Meanwhile, provisional data from Thursday showed that foreigners withdrew over 1,900 crores. The month-to-date outflow is now around 24,200 crores. On to derivatives, and the Nifty's put-call ratio went from 1.08 to 0.96, while the Bank Nifty's was flat near 0.76. The addition in Nifty calls was significant compared to that seen in puts, and implied volatility rose 47 basis points, which means that market participants remain bullish. For options expiring on 21st August, resistance sits in the 24,700 to 800 zone, while support lies between 24,500 and 600. The range shift is higher, and that means the outlook is bullish, at least for today. Elsewhere, 1% out of the money call volatility fell more compared with similar distance put volatility, and that means volatility traders might be looking to take profits at higher levels. Speaking net index options activity, foreigners and proprietary traders turned bearish, while retail investors flipped to bullish. Elsewhere, foreigners' net short positioning in index futures was flat near 183,000 contracts. Looking forward to today's session, the Gift Nifty was 232 points higher at 7 a.m. Asian markets were flat while US index futures were up around 0.15%. Coming to individual stocks, Adani Ports and Suzlon were at horizontal support, while ABB and Tata Motors were at horizontal resistance. Aditya Birla Fashion and APL Apollo Tubes were at trendline support. Speaking market breadth, 31%, 48% and 52% of stocks in the NSE 500 were above their 50, 100 and 200-day averages. That is a wrap on the day's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you, and we will see you tomorrow at the same hour. Have a nice day.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.